Why do billionaires pay less in taxes than the average worker? It seems unfair, right? But the truth is, they aren't breaking the law. They're just using the system to their advantage. The wealthy have mastered tax-saving strategies that most people never learn. But here's the good news. You can apply some of these strategies too. In this video, I'll break down exactly how the rich legally pay less in taxes and how you can do it too. Number 1. Understanding how taxes work. Taxes are the price we pay for public services, but not everyone pays the same amount. If you earn a salary, you get taxed before the money even reaches your bank account. The U.S. tax system is progressive, meaning the more you earn, the higher your tax rate. For example, if you make $50,000 a year, you might pay 22% in federal income tax, while someone earning $500,000 could be in the 35% tax bracket. But here's the catch. The ultra-rich don't make most of their money from salaries. Instead, they earn through investments, businesses, and tax-friendly strategies that allow them to legally avoid paying high taxes. If you understand where money comes from and how it's taxed differently, you can start applying the same methods the rich use to keep more of what you earn. Number 2. The difference between earned income and capital gains. One major reason the rich pay less in taxes is because they focus on capital gains instead of earned income. Earned income, like wages and salaries, is taxed at high rates, sometimes up to 37%. But capital gains, which come from investments like stocks and real estate, are taxed much lower. If you hold an investment for more than a year, you might pay only 15% or even 0% in some cases. This is why billionaires like Elon Musk or Jeff Bezos barely pay income taxes. They don't rely on a salary. Instead, they hold assets that grow in value and get taxed at a much lower rate when they sell them. If you want to pay less in taxes legally, start investing. Even if you begin with just $50 a month, over time, your money will grow while being taxed far less than a paycheck. Number 3. Using business structures to reduce taxes. Owning a business is one of the biggest tax advantages the rich have. When you're an employee, taxes are taken straight from your paycheck. But as a business owner, you control how and when you pay taxes. Businesses get to deduct expenses, things like office supplies, travel, home offices, even meals and entertainment. A person earning $80,000 from a job might pay around $20,000 in taxes, but a business owner making the same amount could legally write off $30,000 in expenses, bringing their taxable income down to $50,000 and lowering their tax bill. Even if you're not running a big corporation, starting a side hustle or freelance business can give you access to tax deductions. Whether it's selling on Etsy or consulting on weekends, turning a passion into a business could save you thousands in taxes each year. Number 4. Real estate. The wealthy's favorite tax shelter. Rich people love real estate, and for a good reason. It's one of the most tax-friendly investments. First, real estate investors can use depreciation, meaning they can claim tax deductions for their property losing value even if it's actually increasing in price. For example, if someone buys a $500,000 rental property, they can deduct about $18,000 per year in depreciation. Second, through a 1031 exchange, they can sell one property and reinvest the profits into another, without paying any taxes on the gains. Third, they can legally deduct mortgage interest, maintenance, and even travel expenses if the trip is related to property management. If you want to start benefiting from real estate tax breaks, you don't need millions. Even buying a small rental property or renting out a spare room can lower your tax bill while building wealth over time. Number 5. Borrowing money instead of earning it. This is a tax trick that billionaires love. They borrow money instead of selling assets. Here's how it works. Instead of selling stocks, real estate, or businesses, which would trigger taxable income, the rich take loans against their assets. Since loans are not considered taxable income, they can access millions of dollars without paying a cent in income tax. For example, if a billionaire owns $100 million in stocks, they can borrow $10 million against it to fund their lifestyle, without paying capital gains tax. Even better, the interest on these loans is often tax deductible, meaning they can write it off. While most people don't have millions in assets, this strategy can still be applied on a smaller scale. Using home equity loans or borrowing against investments can provide cash flow without triggering high taxes. Number 6. Tax-free retirement accounts. The rich don't just make money, they protect it using tax-free retirement accounts. One of the best ways to lower your taxes is by using accounts like Roth IRAs, 401ks, and HSAs. With a Roth IRA, you pay taxes up front, but your money grows tax-free, and you don't owe anything when you withdraw it in retirement. Let's say you invest $6,500 per year in a Roth IRA starting at age 30. By retirement, you could have over $1 million tax-free. 401ks work differently. You defer taxes until retirement, lowering your taxable income today. If your employer offers a 401k match, that's free money you shouldn't ignore. The rich max out these accounts every year to reduce taxable income and grow wealth without paying unnecessary taxes. Even if you can't max out, contributing whatever you can still makes a huge difference. Number 7. Donating to charity for big tax deductions. Billionaires often donate millions to charity, not just out of generosity, but because it's a huge tax advantage. When someone donates to a qualified charity, they can deduct that amount from their taxable income. If a billionaire donates $10 million, they could reduce their taxable income by that amount, potentially saving millions in taxes. But here's the next level: starting a charitable foundation. This allows the wealthy to control where their money goes while receiving major tax breaks. You don't need millions to benefit from this strategy. Even donating $1,000 a year can lower your tax bill. If you give to charity, make sure to keep records of your donations and take advantage of the tax deductions they offer. Not only are you helping a good cause, but you're also keeping more money in your pocket. Number 8. Moving to low-tax or no-tax states. Many wealthy people relocate to avoid high state income taxes. For example, if you live in California, you might pay 13.3% in state income tax. But if you move to Florida or Texas, you pay 0%. That's why you see so many billionaires moving to Miami or Austin. They're saving millions in state taxes alone. Even for the average person, moving to a low-tax state could mean keeping thousands more of your earnings. If you work remotely, relocating to a tax-friendly state can be a game-changer. Some countries also have no income tax at all, like Dubai or Monaco, attracting ultra-wealthy residents. If moving isn't an option, consider using legal residency strategies to reduce taxes, like spending part of the year in a lower tax state. Number 9. Hiring expert tax professionals. The rich don't do their taxes alone. They hire the best tax experts who find every legal way to reduce what they owe. Accountants and tax lawyers help them structure their wealth in the most tax-efficient way. They also plan ahead, making moves years in advance to legally minimize taxes. Even if you can't afford a top-tier accountant, consulting a tax professional can help you find legal ways to save money. Now you know the secrets behind how the rich pay less in taxes, and how you can too. The key is using the system to your advantage, just like they do. Start making small changes today, and over time, these strategies can save you thousands. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss out on more money-saving tips. Thanks for watching, and I'll see you in the next video.